Hi everyone. The Walt Disney Company reported fiscal year 2023 first quarter results. In the first one, with Bob Iger back as CEO of the Walt Disney Company. So let's take a brief overview of the quarter's results and see what came out of Bob Iger's first quarter back at Disney. Overall momentum is slowing in the streaming segment, but that's okay for Disney investors because overall revenue increased by 8% in the first quarter to 23.5 billion. Earnings per share of 70 cents was an increase from an earnings per share of 63 cents in the first quarter of 2022. The highlight, the MVP for Disney right now is the park segment. Revenue in that segment jumped 21% to 8.7 billion, and operating income increased 25% to 3 billion. So you could see their excellent profit margins, an operating income of 3 billion on revenue of 8.7 billion, over 33% operating margins in this segment, which is incredible. And to think that this segment is still not back at full strength just yet. The international visitation has yet to recover to full strength for Disney's domestic theme parks here in the US at in Florida and in California. And the international theme parks are just now reopening, right? Think of the Shanghai Disneyland really just reopening now with the Chinese economy reopening, and then the Hong Kong park and the parks in Japan really just gaining momentum now that international visitation is going to pick up steam, right? So the parks are generating these types of excellent margins while still not being back at full strength. So over the next, I would say 6 to 9 quarters, investors can expect continued excellent performance from the park segment as consumers keep unleashing pent up demand for away from home experiences, right? We've been tired of staying at home for the past 2 years or so. We're excited to get out, spend money and time away from home, and that's truly benefiting Disney's theme park segment. However, that could be coming at the expense of its streaming segment, which saw revenue increase by just 13% to 5.3 billion. Operating losses worsened to 1.05 billion. That was up from 593 million year over year. However, investors can expect these losses to start to moderate as as Bob Iger noted that they're going to start reducing some content cost. They made a bunch of layoffs. We'll talk about that a little more down the line. Total Disney Plus subscribers fell by 2.4 million from the previous quarter to 162 million. This was a combination of factors. For one, Disney implemented a significant price increase from $7.99 per month to $10.99 per month to US subscribers. Second, they didn't renew their rights for the cricket rights in India, which is a very popular sport, and Disney Plus has a robust over 40 million subscribers from India, and so those and the majority of subscriber losses were all from its Disney Plus Hotstar segment over in India and the surrounding nations. And now that's good news for investors because those customers tend to come at an extremely low average revenue per user, less than $1 average revenue per user in that Disney Plus Hotstar segment. So global Disney Plus average revenue per user increased by 1% to $3.93. This is a bit misleading because, like I mentioned, the Disney Plus Hotstar subscribers are subscribing at less than $1 per month, while the domestic and European Disney Plus segment is over five, close to $6 per month. So I mentioned earlier this was the first quarter with Bob Iger back at the helm. So Bob Iger is asking the board to reinstate Disney's dividend. Remember they paused their dividend payments right at the onset of the pandemic as Disney realized that it was going to face significant headwinds having to close all of its theme parks. Now Disney CEO Bob Iger has asked the board to begin deliberations in reinstating the dividend by the end of the 2023 fiscal year. Now, he mentioned it's going to be a modest begin to its dividend, but it hopes to increase it over time. Bob Iger is also restructuring the company into three segments now, and it announced major job cuts and cost cuts, saving over $5 billion, targeting over $5 billion of cost cuts, which in my opinion are overdue here. They, in my opinion, overinvested in rolling out the streaming segment, spending too much money on content and other things to try and really roll out that streaming segment, and a bit of moderation is overdue here. So investors cheered these results, and in my opinion, this was an excellent quarter for Disney. Disney's one of my top 23 stocks to buy in 2023, and this quarter further uh, solidifies my recommendation for Disney for 2023. So if you're thinking about buying it, you can go ahead and buy it. This was an excellent quarter for Disney stock investors. All right, that's all I've got for this video. As always, thank you for watching. I really appreciate it, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.